Ramesh Kunikanan, who is the Executive Vice Chairman of Kaynes Technology, has to say with regards to all of this. Mr. Kunikanan, thank you so much for joining, and I hope I'm pronouncing your name correctly. This is Neeraj Shah here. But
no problem.
Yeah, perfect. But thank you for joining in. Now, fill us in. I mean, you've issued a clarification, so I'll first let you answer the need for that, and then we'll come to the specifics of the 2 or 3 things that we want to ask you.
As far as we are concerned, we have, there is no inconsistency or anything. It is only, as far as P&L, balance sheet, everywhere it is all appears.
Sir, I would just try and see if we can maybe just get a clear line, because right now I'm finding it very difficult to hear what you're trying to say. Alex, I don't know if you have better luck, but it is a bit of an audio issue there. But this is a very important conversation, and I urge viewers to stay on. But if we can resolve this line, Mr. Kunikanan,
repatch that.
Yeah, no, Mr. Kunikanan, I would urge you to either stay on or come back on this line as well. But it's very important because a lot of our viewers would want to know and hear from you. So we need to have this conversation. Dharmesh, maybe you just finish your point while we wait for Mr. Kunikanan to come back.
Yeah. So, I mean, the point was that I think this is a transitory issue with the Kaynes Technology. They would, sort this out. But I mean, this is not alarming enough to have a deceleration going into the business. So the only problem out there is the valuation was always a concern. Such high valuation multiples is not sustainable if you have a CVA or serious competition coming into play. So L&T coming into the EMS space is definitely would be, most of it would be mitigated, the valuation part, and that is what is happening out there. So my only thing is whether 70, 80 kind of a PE multiple would still warranted when you have a growth rate of say 25-30%, and that is what is being playing out in most of the EMS space.
Okay, so for Dharmesh Kant viewers, it is all about the multiples and everything else is transitory. Mr. Kunikanan, thanks for joining in. And like I said, we'll come back to you with specifics, but the issues that you've had felt the need to clarify in response to a note or 2 that have come out. Could you talk about that? Do you believe some of these issues are transitory in nature, or they are just wrongly portrayed?
It is just a transaction related and wrongly portrayed. We have clearly explained this.
I want to just take us through what stood out for you, because I see 6 points on which you've made a summary of the observations and giving your response to it. Which is the one that stood out for you the most, sir? Mr. Kunikanan? So let me ask you specifics. Okay, the contingent liabilities, right, which have increased, and as per Kotak, they're about 18% of your net worth. How would you respond to that?
Sir, good morning. Thanks for asking for this clarification. If you see the 18%, it is including the bill discounting and the working capital. If you split it up, it's coming to only 20%. But if you apply the same logic for the previous year, it was 25%. Because bill discounting as a process when we acquired the new business and the Iskramico, where the metering business, the nature of the business, it takes a little longer time to collect it from the receivables of the government and the transactional business of this. It has happened like this. So these are all the transactions. If you apply the same logic, the 17% this year was 25% the previous year. So we fully understand as an organization, we are committed for giving a transparent feedback and information to all the investors, shareholders, and people like in the public. But the only thing that we wanted to say is we have given this response because there is a concern that is raised. Yes. As far as we are concerned on all the 6 points, when you see, most of the transactions is as per the statutory standing. The only thing is, during the year of transaction from Iskramico, during the merger of the year, one disclosure is inadvertently missed, but the balance sheet and P&L has their information. That's as a related party transaction. First 6 months they were as a supplier, second 6 months is the part of the related party transaction. That is the only thing that we feel that we will improve in the governance and our disclosure.
But that's where the problem arises. And I just want to confirm, am I speaking to Mr. Kunikanan?
Yes.
Okay. Mr. Kunikanan, so that's where the issue arises, because this is not a small transaction. It's 180 crore rupees. So I think the concern that is raised, and of course your statement is that it was inadvertent, but then that's where you have...
So it is already, we had no disclosure problem, because if you see, it is there in the balance sheet and everywhere it is there. It is only in electronic. Notes to accounts is missing. So it's an error. We agree, we will correct it.
That's one of 6 points. This is Tamanna here, and again, I want to thank you for joining us. We were just clarifying on who's speaking to us because we heard two different voices. But never mind. I just want to come to point number 4, which is about average borrowing costs in FY 2025. What have been your average borrowing costs? Are they at close to 18% figure?
No. Our average borrowing cost is around 10%. JPS is also with me. He would like to add. He's our CFO.
Yeah. Sure, sir. Yes.
Yeah. So fundamentally, this what is divided by the borrowing, actually this is rotated almost 4 times a quarter actually. And these are all costs that we incur for discounting our receivables actually. So if we take a simplistic method of taking the total cost and dividing it by borrowing, this number will come. But otherwise, if you really see, these are all part of...
Cost of borrowing is around 9-10%, not more than that.
And these are all part of working capital demand loans actually, which rotate every 90 days. So 4 times a year, we will utilize the same funds. So I think any other balance sheet also, if they are using discounting, exactly the same situation will emerge. Cost of borrowing in our case, in fact, we are not allowed to show the sanction letter from bank because it's confidential between us, but it's sub 9% today as we speak.
Okay, this question actually for Mr. Ramesh, and I'm going to come back with more specifics for the CFO as well. Why do you think that you've gone from darling off the street to this kind of a situation right now because of one note? How do you look at it? Is it some lack of communication? Is it maybe some mistakes which have happened? How do you see it, sir?
I think somewhere we would have lack of communication or something, which we could have clarified better, which we will improve. I'm sure my team will improve. We have continuously improved and reached here. So this is one more passing phase. We will reach there. I'm very confident because ultimately the business numbers are looking very promising.
Sir, just on that point, for thus far, the revenue growth of the core EMS business, right? If I exclude Iskraemeco, is what? Was 20% FY25, but the H1 is circa what, 5%, right? And yes, there is a broader EMS slowdown, but these numbers relative to the growth that you've shown?
No.
It is, right?
If you see, before Iskraemeco acquisition, we were a supplier to them. So we were supplying all those things. So if you add that, whatever number what we are quoting is all right. There is nothing wrong in that.
Okay. Sorry, you want to make a point, the CFO, please?
No.
Okay, no problem. Okay, then let's try and wind it around growth rates, right? Your growth that you exhibited, with or without the acquisition, is at an X% for H1. Do you reckon H2 will be better than H1?
Always H2 will be better than H1.
How
but
much,
only
sir?
thing is, this year H1 is not looking that attractive, but I'm sure and certain whatever numbers which we are talking, we will achieve.
Okay. And therefore, what you said, or I believe what the conversation that we had after the numbers about you sticking to your growth guidance of 40-50%, I presume that stays even now.
Yes.
Okay. And will that happen with receivables and the working capital issue getting resolved in the second half, or will it take a couple of quarters to get resolved?
Second half, it should improve. It should become sub 90. But to have a total improvement, it will take some more quarters.
Sir, is the ideal number of days that you would like to have on the working capital?
EMS industry is a working capital intensive industry. However, the ideal spot what we are looking is around 75.
And when do you think that 75 is achievable realistically, sir?
It is still a long way. Whatever I have projected for 28, that is the type of number when we will achieve that.
FY28, I just want to confirm. FY28 is when you see 75 happening.
Yes.
Sir, there was a SEBI show cause notice also earlier in this year, and the queries there were on a structured digital database maintenance. Have those concerns been resolved?
Yeah, it has been resolved already.
Okay. Okay. In terms of the core of the issue, and we're coming back to it, just as you know, we wrap out this conversation, but just to understand, the core of the issue is that your last quarter's numbers looked robust because of an acquisition of a company called Iskra & Co. Now, the treatment of some of those components on your balance sheet has been the core of the issues. I come back to this. Has there been an oversight there, a lapse there, or a misunderstanding in the reading of those transactions?
It is only a misunderstanding in the reading.
Who has misunderstood over here?
I think you have said a lot of things in your question itself. See, fundamentally, there is no difference, no lapse, etc. in terms of numbers. There were two disclosures which ought to be have also typed in as notes to accounts in one of the subsidiaries. We have about, I think, 16 to 18 subsidiaries. So obviously, as a company, a young company which starts growing with a standalone financials into a consolidated financials, there are some of these misses that happen. Why they happen, of course, we are trying to fix that. But fundamentally, those two disclosures, if we were there, that this entire note actually has no locus standi at all. So what they have said is, if somebody has extended this whole logic saying that, oh, okay, two lines are missed, so is there something else missed, etc. Nothing is missed. This is all also checked multiple times, and these auditors are also auditors who audit other listed entities and all that. So there is absolutely no problem of accounting or putting it together or even business. So these are all decisions we take in acquisition of companies, and companies' prior performance is something which is out of our bounds, right? We cannot go back in the past and change anything. But getting forward, we have also tried to alter the course of, let's say, the business from being an AMISP kind of a situation to a device maker and so on, and that we are true to that. And the other businesses in second half, as you know, you would probably see a smaller percentage of Iskra & Co in our total shipping, and there will be other businesses like railways and aerospace and all that. So the way to look at all this is that, yeah, it's an important point of view, but we wonder whether people, you would ask this question about from being darling, etc. We thought that we did a better job in the second quarter.
I think I'm very sure and certain we will continue to be the darling of that.
Yeah, we'll come back stronger, I guess, because some of these misunderstandings happen with people who who want to.
I agree. Once there's clarity, things always improve, and the business has been strong. It's just about the goodwill and intangibles part of the acquisition and the treatment thereon. You're saying that also, Mr. Sampath, I'm directing this at you now, was a misunderstanding or...
No. The India standards allow us to call it an intangible. So, always there is a decision to be taken. You can call it a goodwill, you can call it intangible. Our auditor in his wisdom has advised us that make it intangible because it is pertaining to a particular customer business contract. Supposing this was to be extended beyond the business contract, then you can probably call it a goodwill too. So it's just a choice. It does not take away from the robustness of business or governance or any of this. It's a decision made. And we will be evaluating, we'll be constituting committee internally, evaluating all the policies, accounting policies. They are already published in our website. We will take some comments from people. So supposing we had called it goodwill, people can come back and say, why is it not called intangible? In which case, we will not be able to answer that question. So it is not a misunderstanding. It is just a...
Jairam, the question that arises for now a very large entity that a lot of people are interested in, I think your investors would want to know whether you were given appropriate advice, because seemingly you have followed advice and that has not gone to plan. So would you say that you would be reviewing where you're getting advice from as well?
Yes, in due course we would do that. I'm not at liberty to tell you publicly, but certainly we have taken all of these points into consideration, and we will take whatever actions that are required, without limit, to make sure that this is put back on rails as far as the perception bandwagon is concerned.
Gentlemen, both of you, my final question at least is, is that the issues that have been highlighted, or seemingly issues that have been highlighted by a note or two, come on the back of some growth concerns for the industry, but more specifically for you. And because of the multiple, the PE multiple that your stock traded at or trades at, it becomes an even more important determinant of how well you grow. You are confirming today, as we speak right now on NDTV Profit, that your growth rates that you guided for, Mr. Sampath, at the end of Q2 numbers and even now, stay as they are. The OSAT facility, aerospace, defense, etc., all contributing to it.
Yes, absolutely.
Okay.
Yes.
And you did confirm, I think Mr. Kunikanan did confirm, that the working capital issue and the receivable issue gets resolved in part in the second half and improves further in FY27.
Absolutely. Yes. Yeah, that's the practical view of looking at it. Obviously,
That's the point I told.
it's not a
I'm
shift that we do.
reconfirming.
Yeah. Yeah. Absolutely.
Okay. Okay.
Okay. I think that's quite a clarification there. Just one last bit. The contribution of this new acquisition, which seems to be at the source of all of this right now, do you see that contribution as maybe overvalued, or will it be a majority contribution to your revenues going forward? Can you give us some perspective on that?
Yeah. So this particular acquisition gave us an entry into the entire power distribution infrastructure electronics. And we have been, whenever I've had the chance, we've always said that the high rate of sales is driven by the RDSS project of the government, and which is going to last for a limited amount of time, 8 to 10 years time frame. And then thereafter, we are also focusing on, there are other relationships that we have other than just Iskrameco, wherein we are going to build grid electronics. We are going to build substations and distribution points and feeder points, etc. So our ultimate destination after 5-10 years time frame is that. But this is a necessary component of understanding this entire, let's say, electrical distribution structure and being in touch with all the AMISPs, being in touch with the Indian system. And that's what we have been basically working on. And this is going to be becoming a smaller portion of our sales over time. We are going to have a run rate of whatever 800 to 1,000 crores every year over the next 8-9 years time frame, whereas the other sales will keep increasing. So as a percentage of importance in terms of our P&L and also concerns of balance sheet, etc.
We are planning only to become a device manufacturer.
Yeah.
Sorry, can you say that again, sir? You're planning to become only a device manufacturer?
We are a device manufacturer.
Device.
Not like an EPC company wherein, we have extended the commercials with the customer, etc.
Okay.
So we are an ODM player, solution and devices. Yeah.
Okay. Thank you so much,
Thank you.
Mr. Ramesh, and of course, Mr. Sampath, for that clarification, for coming in and taking our questions. We always appreciate it when management answers all the tough questions, because that's only fair. The investing public has put faith in your company and your growth. So thank you so much for that. I'm going to pull up
Thank you.
Thank you.